The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the December 9th magical Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with our empowering beliefs. You know, it's all about becoming your own electrician, the electrician of your beliefs. Because beliefs, they've got the power to create and, of course, the power to destroy. You and we've got that incredible ability to take any experience of our lives and create a meaning that either disempowers us, none of us tigers, none of us do that, or what we do is we can literally save our lives by creating a meaning that empowers us and takes us to places we've never even dreamed of. Think about it like this. There truly is only one thing in life you can control. That is the meaning that you give to something. And that's the beauty of the markets we trade. We've got bulls. Some of you are bulls that are listening. We've got bears. Some of you are bears that are listening as well. That is truly the beauty of it. One season event is a selling opportunity. One, a buying opportunity. We're going to go ahead and take a look at the charts, and we're going to see what the charts tell us is out there. You see, your beliefs, the meaning that you give to events, to any kind of statements. Maybe it's charts that you're looking at. You are the one in control of that meaning. And it's pretty cool when you really think about it. And the reason is because what you and what we can or cannot do, what we consider possible or even impossible, rarely, folks, is it a function of our true capabilities. It is more likely a function of our beliefs about who we are. And that matters because all breakthroughs, all of our personal breakthroughs, they begin with a change in our beliefs. Doesn't matter what it is. If you're trying to lose some weight out there, you got to change your belief system about what it is that you're eating and what it is you're putting into your body out there. And the question is, how do we change? Well, the most effective way to change, and there's nothing like the season here where you've got the Christmas Carol, the Charles Dickens story. I found the most effective way to change, well, it's to get our brains to associate massive pain with that old disempowering belief. We've got to believe at the deepest level, at our core, that disempowering belief that it's cost us in the past, well, we know that to be true. And if we continue, that it'll cost us in the future. Well, you don't change your ways, it'll cost you, and ultimately will only bring pain to you and all of your loved ones in the future, folks. That is the Charles Dickens process. Use it. It's a great tool. It's a great tool to be used this time of year. You know, sometimes knowing what we don't want is just as important as knowing what we do want. I believe knowing both is absolutely key, because once we rid ourselves of that disempowering belief, it's going to leave a big vacant hole out there. And that's when we need to associate tremendous pleasure to the idea of adopting a new empowering belief. We must know, because I know this to be true for sure, in any moment, the decision that we make can change the course of our life forever. Could be the very next person we stand behind in a line. Maybe it's sitting next to them on an airplane while you're traveling around the world this holiday season. Maybe it's the very next phone call that you make. Maybe it's one that you receive, the very next movie you see, the book you buy, the page you turn, the paragraph you read. Maybe it's the very next show that you hear out there. Any of these, folks, could be the one single thing that causes the floodgates to open. And then all of the beauty, all of the things that we've been waiting for, they'll fall right into place. Well, let's go see what's falling into place in these markets here. Dow is up 30 points right now. It's trading out at 16,050. You know, it needs to complete that 1,000-point move up into about the 16,600 level. S&P is up almost 5 points. It's trading out at 1809. Composites up 12. Russell 2000 throwing a little bit of a hissy fit this morning. It's down 69 cents. It's trading out at 11.30. Apple's up about $5. Microsoft up 1% this morning, up 37 cents. Google's up $6 and change. In fact, Google's leading the charge to the upside. You've got Given Imaging. Man, you try saying that name on the air a few times. It's up 25%. I wonder if that is a IPO. Let's see. What do we have here? No, they were given a downgrade alert. Looks like nobody's paying much attention to that matter out here because that is trading up out there. You've got Cisco, the food company, SYY. That's up a nice, healthy 17% this morning. That is on a merger with, what's the name? U.S. Foods and Cisco are merging. Mohawk Industries up $5. Celgene up 5. Apple up 5. Wynn Resorts up 4. LinkedIn up $3 and change. Infinity Pharmaceuticals up 3. Baidu up about 3. Gaming and Leisure, GLPI up about 260. To the downside here, one of the strong stocks, Pharmacyclics, PCYC. That's a little rocket ship out there. Maybe we'll take a look at that. Continental Resources, CLR, that's trading off about $3 and change. Biogen, another little rocket ship, that's trading off $3 out there. Restoration Hardware down 283. Edwards Life Sciences off 2. Amazon down 2. Questcor Pharmaceuticals down 2. Not much in the way of damage to the downside. Our call-in number, 877-927-6648. So where do we begin? Well, first let's start off. Let's take a look at the New York Stock Exchange chart out here. Then we'll go take a look at the VIX. New York Stock Exchange, by the way, right now, the wider swath, the wider breadth of the market, most certainly it's up 17 points right now. It's got net advancing issues of about 200. All it needs today is 100 net advancing issues for it to turn bullish out here. If we take a look at its retracement from its over a period of 4 days, really 3-day move to the downside out here. That's really, as we take a look at it, made a high out here on November 29th. We saw a move down on the 2nd, on December 3rd, and then on December 4th. Had an inside trading session on December 5th, even though a lower close out there intraday, no siree. If we take a look at the retracements from that little high down to the low out here, we'll see that it made that 0.618 retracement level with really a wide-ranging bar. Some folks might say, hey, that doesn't look that wide to me. Well, folks, what you've got to always do, you got to visually, what you should do, in my opinion, is you should visually draw it in and take a, let's see how wide-ranging bar the New York Stock Exchange really had on Friday out here. Let's use the old, let's use this tool right here. And because if we take a look at where it actually closed on the trading session here from the prior day, let's go ahead and color this one in. Nice lime green out there, nice gopher green. That is actually let me get rid of the retracements. Let's do this here. Let me do this. Let me pull this over here, see if I can grab it. Come on, baby. There you go. Okay, I'm going to grab it. Now take a look at that wide-ranging. Take a look at Friday's bar, and now compare that bar to what really we saw, because if we take a look at where price really closed on Thursday, and you take a look at that bar, how strong is that bar to the upside? Yeah, exactly. It's huge. It's not small. It's absolutely huge out there. So the mere fact that it was moving into the 0.618 retracement level, is that something that you should have been aware of, been concerned about, the mere fact that it only made the 0.618 retracement? Yeah, it's one thing to take a look at. But, folks, it came in there with a huge, wide-ranging bars. Markets, they do not end on wide-ranging bars like this. New York Stock Exchange, at a minimum, is going to go test the November 29th swing point. I assume here at this stage, well, I won't assume, we'll see what happens when it gets up to that level. The low is 10,174.32. The high is 10,229. It does look to me like there is no reason over the longer haul the New York Stock Exchange will at least be able to take out that level. In fact, if we take a look at the New York Stock Exchange on a longer-term time frame, I'm glad you asked me to do that. It's my pleasure. Let's take a look at what it's really doing. In the monthly chart out here, the monthly chart says the October 31st, 2007 swing point, the low is 98.24 out there. It's trading inside the swing point on a monthly basis. It closed in there 2 months ago in October. It closed in there last month. You close inside a swing point, and what does it want to do on the longer-term basis? Yes, it wants to go test the high. Now, different story perhaps if, in fact, it rejects this swing point by closing lower in a month. That would mean mean it would have to close under 98.24 out here on a monthly chart. Now, these blue horizontal and red horizontal lines that you see going across my screen, those are the primary trading range boundary lines for the New York Stock Exchange. I've built a tool that automatically takes the data on your screen and creates those natural areas of support and resistance. Those are also helpful to understand what's going on from a trading perspective. I'm going to go ahead and give those to everyone that attends a free workshop that I'm going to be putting on. Well, it's a free workshop if you are a subscriber. We're going to make it pretty easy for that to occur as well, and there's going to be incredible information that you're going to want to be able to have access to, including being able to get this tool as well as Basil's peak counter here. I just simply have created a tool that just goes out there and is able to easily identify the so-called, I use the numbering system, he uses A, B, C, D, and so forth. It's not the trading system, just simply is a tool to be applied to a system that allows you to go out there and determine whether you're at the 3rd, 4th, 5th, 6th, 7th, 8th, whichever peak it is that you are looking at out here. But right now, inside of the New York Stock Exchange, it is saying that it wants to get up to 10,438. That's the next primary trading range boundary line. That certainly is the high, 10,387 of October 31st out here. You can see on a counter basis coming off of the low here in October of 2011 last month. Of course, we're not inside this month. As long as you get a close above 10,229.57 out there, that says that you are still really identifying that fourth peak out there, that peak D. And let's send out a bunch of white light there for Basil. I don't know that I'm sure he's not listening in out here, but we just need to send him a bunch of white light so that he can heal up nicely here very quickly and get back to us here at TFNN. That's what's going on inside the wider swath of the marketplace, the New York Stock Exchange. We took a look at the daily, a little bit more noisy than the monthly out here. Let's take a look at the longer-term time frames as well on some of the other stock charts. Let's look at the S&P 500. The S&P 500 right now, it's trading out at 1809. Here is the longer-term perspective of the S&P 500, or one of the charts that we'll use for the S&P 500. You can see that its primary trading range boundary line. Now, this dark line going across my screen, 1279, that was the largest number of co-located opens and closes out here. These are the horizontal ranges. If you take a look at what occurred, and in fact, folks, we can go back to all the highs inside the market, all the major highs out here, and you're going to find one thing that is consistent, and that is that the markets will make higher highs on less relative strength out there. You'll see a divergent pattern that will show up. Well, we saw that take place between December of 1999 and the high that was put in December of 1999 and March of 2000 out here when the high came in at the 1552 mark. You saw price move higher. You saw a relative strength that was actually not making a higher high. That was a divergent pattern. That was a time to be careful out there. We saw the same pattern that took place here back in October of 2007. We saw this high that came in back in May of 2007, moves to a higher high, does it on less relative strength. In this case here, you got that nice one-month reversal signal in November of 2007. That was a signal that there was going to be some type of retracement. Of course, price moved right back down into that primary, that main, we'll call it the Superman primary trading range, the super trading range boundary line. That level held, and then boom, price moved through that. Now what we can see here, if you take a look at the high out here that was made that we would use as our benchmark, that's July, relative strength index was at 74.43. Right now, folks, you are at 76.11. No divergence, no reversal. We'll be right back.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow is up 15 points right now. S&P is up 3. Struggling out there this morning here is the Russell 2000. It's off about 4 points. So we'll peek in on the Russell 2000. Right now, the chart on my screen here is the VIX index. It's trading right at that 50-day exponential moving average out there. 1399 is where it's trading. The actual average exponential moving average is at 1390. So it's slightly above this area. We'll certainly want to keep a watch on this here. That's really the only thing that would get in the way of the markets moving higher. But let's take a look at the longer-term perspective. Good question was posed to me inside of the Tigers' den. Said, well, what if they, because I'm talking about really the bullish outlook. All I'm doing is just really reading the charts here, and I'm willing to accept new information as it's provided to us. But let's just take a look at the charts and what they are saying. The question was, what if they say taper? And my response is, what if they don't say taper? You got to trade the charts as they are. That's all that we possibly can do out here, and because I can't tell you when somebody says something what it actually is going to mean to the market. Maybe it has some meaning just for a couple of days, and so it all depends on the time frame that you're trading on. You want to stay inside that time frame, and I know that 70% of you out there that what you are taking a look at and managing are your longer term accounts. your retirement account. So you've got to have more of a longer-term picture than certainly when I take a look at the 30-minute charts out here on my screen in the mornings or what have you, just to give an idea of what the market is doing at that moment. So that's why I want to go take a look at the longer-term charts out here. Back to the S&P 500 just for a moment here. This is a little bit cleaner chart for you to take a look at. It certainly shows the 800-point consolidation pattern that it was in, the black dark line going across my screen out here, taking you back into the 1997 time frame. The market clearly broke above that level. That consolidation was tested. We always talk about when consolidations are tested, price will come back and test that area and confirm that it's a breakout. Well, we actually saw that test that took place in June of 2013 as it moved down to 1654. That was a breakout of that level. It says that what the S&P 500 wants to do, taper, no taper, doesn't really matter. It wants to move up to 2350. Now, that doesn't mean it's going to move up to 2350 tomorrow. And, yeah, could price come back and test some other levels? Yes, most certainly. But over the longer haul right now, what the stock chart is telling us, and if we took a look at that divergent pattern that is out here, or I should say a lack of divergence with regard to the markets moving higher, which had formed a previous top out here in 2007. In fact, if we take a look at, it is certainly in the overbought condition, but in really bullish markets, markets will stay longer in an overbought condition, just like in oversold or in a bearish market, they'll stay in the oversold condition. But if we go back to the most recent time period on the monthly chart, when price got into that above the 14 period, above the 70 level of the 14 period RSI, took you from September of 2006 all the way to the highs that were put in October of 2007. So a full 12 months. Well, guess what, folks? We actually, inside the S&P this time around, it was in March of 2013. That says to me we're probably looking at maybe April of 2014 if that same one-year period were to form out here. But at this stage, there is no price relative strength divergence. And I'm not saying April is a turn date or something along those lines. I'm just giving you the facts, giving you the data out here. If we take a look at the peak counter out here, you can see that right now what the S&P is in is trying to make its fourth peak, or that D level out here. If we see the S&P get above last month's high, 1813.55, I don't say it has not formed, most certainly in the month of November. So you're at 1807.70. We haven't seen that high taken out yet. 1811.52. I suspect that we will by the time that the new year comes in, by the time that Santa arrives. So the Santa Claus rally, that is in place for us. And that is in place, and I'm not finding any divergences out here inside any charts that would suggest otherwise. Other than that VIX, just telling you more from an intraday standpoint that, okay, it's still just kind of flirting. That's all it's doing. It's flirting. You know how things flirt out there? Well, all the VIX is doing is flirting with the 50-day exponential moving average. That's what's going on inside the S&P 500. I did mention that it's the Russell 2000 that is struggling the most this morning. So let's go take a look at the Russell 2000. Let's go see what its picture tells us out here. And here's the monthly chart of the Russell 2000. And across the screen here, you can see the primary trading range boundary lines as well. The 1115 area was the last one that it got over. This month here, the month of December, it came back and it tested that level. As long as it stays above 1115, you're at 1126. What it says it wants to do is move up to about the 1200 range out here. That's what the monthly chart is telling us. We're certainly in new ground inside of the Russell 2000. If we take a look at its A to B equals CD pattern, coming off of the 2009 lows all the way up here to the highs that were put in. Yeah, it's above the 1-to-1. The Russell 2000 is saying, hey, I like that 1270 area. I think I ought to go check out 1270. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With market insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow up 10. S&P is up a couple of points right now. And just by quickly going back and taking a look at the monthly chart now on the Russell 2000. Russell 2000, the 1-to-1, 0.272 A to B equals CD. That's why I came up with that price level of right around the 1270-ish range out here. What we can also see is that the Russell 2000 was traveling in about a 500-point 11-year sideways consolidation pattern. It broke out of it with some conviction in January of 2013. That gives you its ultimate price objective somewhere around the 1350 level out there. So that is ultimately over the course of time where this will likely head to. But its next stop right around the 12-ish range, 12.15. You're at 11.26 here right now. Again, this looks at the monthly chart, so you're not looking at the noise of some of your intraday patterns out here. If we take a look at what's going on inside of the daily chart of the Russell 2000, in fact, let's put up my momentum tool out here. Let's take a look at what the Russell is actually doing as we speak right now. Russell 2000. On the daily chart, still just in a little bit of a caution zone out here, just a yellow light, just to slow down. And what it's got to deal with here, it's got to deal with this window, this this little gap that's out here between the trading session from November 29th to the November 30th level. That's what it's got to contend with out here, but it's still in a strong bullish mode out here inside the Russell 2000. It's just in a caution area. It held the last week was really the opportunity for the Bears to try to take control. They had everything going their way, Even the jobs report on Friday, in my opinion, was something that truly should have gone their way, and it just shows you that the Bears have got no conviction behind the move, no energy whatsoever. Friday was not a bounce, folks. There was not a bounce. It was huge. We had volume behind the move. If you take a look at the ETFs out here, let's go take a look at the ETF structure. In fact, let's go take a look at the IWM just to see what happened here on Friday. You had a move up on Friday with 36 million shares. Heck, the downdraft had 43 million shares. That's no big deal. That was December the 7th out here. This had made a low with 40 million shares. So it's not exactly as if we saw a light bounce or so inside of the Russell 2000. Inside the SPYs, it's real clear. Inside the SPY was a big move higher. The SPYs here, the swing point that it's dealing with is November 29th. November 29th, the volume out there, 55 million shares. You came into that swing point. You closed inside that swing point with 127 million shares. Folks, yeah, okay, go ahead, because Friday was a shortened trading session, so double it. 55 will make it 110. You still came into it with 127 million shares inside the swing point, so it is now trying to take out that swing point of 55 million shares. Once it does that, that sets up a small A to B equals CD inside of the SPY. That A to B equals CD pattern, that would look like, let's go take a look at its price projection. That would take a look at a level of probably about 187 out there, not 185, which is your 1-to-1. Why do I say that? Well, if we take a look at the retracement that we've seen here so far inside the SPY, you can see it was really just a dead cat bounce. The .382 retracement level was all that it was really able to do last week. So the Bears had every opportunity to mount a charge. They just simply blew it on Friday. So until we start to see some volume or something come out to the downside up here, this market wants higher price. That's what the SPYs say. Let's go take a look at. And, of course, you're going to have to get the Qs, the NDX 100, and the composite to tag along and show you some kind of move to the downside out here, and that certainly is not the case. Let's take a look at what the Qs did here on Friday. Volume, 36 million shares out there, taking out a swing point that had 26 million shares from December 2nd. Geez, took out the swing point. This says 88.58 is the likely next stop. Oops, I didn't mean to do that. What did I do there? Oh, I just grabbed the wrong tab. That was... I'm sorry about that. Let's come back and take a look at the price point objective. So just your 1-to-1 says 88.57. I say more likely $90.50 or so inside of the Qs is what we will likely take a look at. So the Qs had volume. They took out a swing point with volume out there. How about the Dow Diamonds? Well, we know the Diamonds here. What the Diamonds actually did last week as they came back and they tested a breakout of that trend line, the rising trend line coming off of the key reversal session from May 22nd. The high is 155.14. Then taking a look at the next key reversal session out here from November the 7th. The high there of 157.8. That's a red diagonal line going across my screen out there. They came back and they tested it. Guess what? It held and it bounced off it like a little trampoline. Volume inside of the Diamond, 6.3 million shares going into what? The best that the Bears could mount was a downdraft on December the 2nd out here with what? 5 million shares? Yeah, okay, you could say maybe 8.6 million shares from December 3rd out there. If you take a look at retracements out here, retracements, this short-term retracement high to low, it's above the 0.618. It is, almost hit the 0.786, the 160.78 today. If we take a look at the diamonds using the momentum indicator out here. Let's type in DIA. Let's go see what it is doing. Look, folks, all I'm doing is just reading to you what the charts are communicating to us. That's all that I am doing, is taking a look at what the charts are communicating. It has nothing to do with my opinion out here. Last week, my opinion, look, if instead we see in the diamonds here, you see it close below the low of 158.11 sometime over the course of the next several trading sessions, then guess what? The markets will be communicating to us a different opinion. And that would be on a daily basis, not on a monthly, not on a weekly basis. That would be on the daily basis out here. But right now, you are long and strong is the message inside of the Dow diamonds out here, other than somebody trying to, pick a top. That's not what this communication to you is all about. This is telling you about the momentum inside of the marketplace out here. And right now, the momentum is, and we're also inside, by the way, we're also inside the 6-month seasonal cycle out here, the bullish seasonal cycle inside of the marketplace. So Friday was the day. Friday was the opportunity. And really, you go back and take a look at the currency pairs out here. You've got to make this a must. You must be paying attention to the currency pairs. At least the euro, Japanese yen, is wide-ranging the bar as you can get on Friday. Well, certainly could have been a little bit wider than that, but not too much wider. Today, you're seeing some follow-through as well, so there's no give back out there. All these little moves lower are nothing more than buying opportunities inside of the marketplace out there. We had covered in the first hour, we covered on the currency pair. I'll go ahead and pull it up here, the euro-yen currency pair. You can see that it is trading. Now, this is long-term, folks, long-term. You come back to the highs out here from July 31st of 2008 down to the low that was put in July of 2012 out there. The exact 0.618 level, in essence, is where it stopped on Friday. It's trading above that level, which is about 140, 143, 142.92 to be exact. We don't need to be exact here. Right around 143 should be a next area of resistance. But if you take a look at Basil's a peak counter out here, we're only in the third peak. You're only in peak C inside of the euro Japanese yen. And with this currency, this is on the longer term basis, with this currency pair really painting the picture out here, directionally painting the picture of where this market wants to go. Looks to me like the 143 level is going to be taken out, and we'll see the euro, Japanese yen, move up to about the 153 range. That will put in a lot of energy inside of the markets. Again, these are the messages of the markets as we speak right now at 10:42 a.m. on December the 9th. All we can do is just simply interpret the charts based on what they're telling us now and be willing to take new information as it's provided to us. But right now, the info that's being provided to us is long and strong. I mean long and strong out there at the moment. Let's go take a look at some of these stocks here that are moving and grooving in the marketplace. Let's go take a look at pharmacyclics. So PC, let's go put this up on, we'll put it on both charts out here. Give me a moment. PC, what is it? PCYC is the ticker symbol out here. So PCYC. This thing has been a rocket ship out here. Let's pull this back. It's right now. Oops. There we go. There we go. So take a look at this thing. This is in a, I'm sorry. Let me get back to it. So pharmacyclics. Oh, pharmacyclics is actually showing a little bit of weakness out here. It's been in a little consolidation pattern. Let's go take a look and see what kind of volume we see. So here's a stock where people could be taking a little bit of profits. Doesn't look like too much damage, but nonetheless, let's go take a look at it and see, because this could be setting up a buying opportunity at the bottom of a consolidation range. So PCYC is the ticker symbol, and you'll see what I mean when I pull this thing back. You talk about coming off of a bottom with some movement higher out here. Oops, let's come back and take a look at just 2013. Give me a second to do that. This thing had a nice, now this session here, this high volume bar, I don't know what to necessarily make of it in June of 2013, because you had wide, you didn't have wide price spread. You did have accelerated volume, 7.4 million shares out there. Did have a sign of strength shortly after that, and that was on July 10th of 2013, 2.5 million shares out here. It's got a nice little hammer candle right here. So this is the area to really be paying attention to inside of this equity, and that is the trading session. Let's draw a line across it right here at October the 10th. And that's the number that you really want to be paying attention to, whether you're bullish or bearish, or I should say what the number is, shouldn't I? 112.54 out here. That is in pharmacyclics. Let's see. The volume out there is 2.2 million shares. We're going to keep this one on my screen here for a while, so we'll take a look at that level. That is acted as support. If you are long this equity, let's put that in black out there. If you're long this equity, only if you see it close below that. Well, it depends, of course, on when you got in on this thing, but only if you see it close below that would you want to be concerned. And the concern would be, then the question is the 200-day exponential moving average, will that in fact act as a support level right now? That price point is about 105, 104.50 or so. It has not tested that level since going back to November 8th in 2012. Now is at a price point of about $47 or so. So your opportunities to buy are right around the 126.35. That is on pharma cyclics out here. We saw another one of these high volume bars with no wide price spread, and this was on the trading session of November 26th out there. Let me just make sure I've got all the active data. So I don't know what to make of that. And that is somewhere between a price point of 122.06, 125. But I would say buying this in today, moving lower, but volume-wise so far, 379,000 shares. It is into the hammer candle, the top of it. That's got 2.2 million shares. So we'll pay attention to this tomorrow. We'll come back and we'll see what kind of volume as it comes into that swing point. Really the swing point's the day before. It doesn't really matter. That's got the same volume, 2.2 million shares. That's at a 111.54. So that's on pharma cyclics. Let's take a look at Continental Resources. That's trading to the downside out here. CLR is the ticker symbol. CLR, that is trading down with some volume, so it's accelerating to the downside. Let's go see where this is likely headed to out here, see if we can figure that out. Let's take a look at just simply retracements off of its most significant swing point low. That'll take us back into April 22nd. And the swing point high here is November 6, 2013. The April 22nd day, that was also 2013. So you can see it's trading below the 0.382 level, so 91.23 is a logical stop inside of this equity. The last swing point that it had out here had 800,000 shares. You're below that already this morning with 1.1 million shares. Down in this 0.618 level here, I don't see anything of significance to hold this in place. Let's take a look at the potential Gertley pattern that maybe this is setting up out here, see if there's any kind of expansion numbers. And you got about a 3.0 expansion of if you are in a Continental Resource, looks to me like it's headed to that $91-ish level. Google's up $7 and change. Let's go check in on some of our core holdings out here. Let's go see how they are holding up here this morning. Well, you can see Apple, the move behind Apple so far today, about 3.7 million shares in the first hour of trading. It was down with 12 million shares on Friday, and it made a high with 15 million shares. So you've got pretty decent volume in Apple to the upside this morning. We take a look at Exxon Mobil. Exxon Mobil here is now trying to take out its swing point high from November 18th. That had 14 million shares. It's up into it, came up into it on Friday with 12 million shares. This morning here, it's done how about that? So it's done about 5 million shares. So the Exxon Mobil, I imagine if we go take a look at the XLE. Now, Exxon Mobil's got a 7-point consolidation trading range. It closed above that level. $93 is the top of it. It says it wants $100. It's trading at 96 right now, and it's doing it with volume. Looks like ExxonMobil wants to trade to at least $100 out there. That ought to help out the energy sector, the XLE, just simply because of its weighting structure within inside of it. Let's take a look at IBM. Let's go see what IBM is doing out here. This is the daily chart for IBM. Of course, IBM has had some trouble out here. It's really trading inside this descending price channel, whether we take a look at a daily or a weekly out here. Friday's move up inside IBM, kind of lackluster, 4.7 million shares going against 4.5 million shares. So not a lot of energy inside of IBM out here, with it being the number one weighting inside of the Dow. Imagine if IBM had some kind of sign of strength in it. That would certainly help the Dow with its 1,000-point consolidation. That should take it into about the 10,600 level. Right now, flat market, speaking of the Dow, inside the Dow, it's off 87 cents out there. We'll be right back.
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow, it's up 16 points right now. S&P is up 4. Composite is up 10 points. Russell is back 3. Let's check in on the metals, see what we've got going on out here this morning. You've got Goldilocks is up $7. Silver's up 22 cents. Light sweet crude trading back a dime right now. Natural gas, everybody up north using that to heat them. Well, I guess down south, too. That was quite a nice storm that they had in the Texas area. I don't know if you caught any of the football over the weekend. Pretty great games. Well, a lot of great sports on, really. If you took a look at the interesting game now, because I'm a a resident of Florida, because I've been down here for 30-some-odd years. University of Central Florida, congratulations to them. They're going to be playing in the Fiesta Bowl out there, and their game was pretty interesting. Their game was in Dallas, Texas. They were playing at, I don't know if they're playing at the SMU campus, but they were giving away tickets for free. There was nobody in the stands. It was downright cold out there. Now, these are folks that are used to, 75, 80 degrees, 85, of course, they're out there. They're used to temperatures of probably about 110 or so when they're out there playing here in the Central Florida area. And but in any event, they had a great season and nice rewards out there. So that game was pretty interesting. It really gave you an appreciation. I was pretty surprised. Of course, most people couldn't really get out. It was dangerous to drive, quite frankly, to get out there. Then the game yesterday, Philadelphia and the Detroit Lions. That was the Snow Bowl for sure. I mean, that was a blizzard. That was a beautiful thing it's a beautiful thing when you're down here and it's 80 degrees outside and you're in your shorts and you're putting your air conditioner on, but it is pretty to see out there, so be careful if you're driving around in that. Of course, FSU, congrats to them. Hey, that Ohio State-Michigan game, that was a great game as well. And so I had a lot of winners. So this past weekend was a great for me because I am a Michigander. That's where I was born and raised as a kid. And so a Michigan State fan, University of Michigan fan out there. So Michigan State beating Ohio State out there. That was pretty nice. So they're off to the Rose Bowl out to Pasadena out there. So got my Michigan teams winning, my Florida teams winning. Doesn't get too much better than that. Then yesterday, did you catch that golf out there? One of the golf tournament, Tiger Woods hosts a tournament out at Sherwood Country Club, one of my favorite places to play. A little sad that they're no longer going to be holding that tournament there because it's I haven't played there in a while, but I used to play out there all of the time, and so it's always nice to be able to go back and reminisce about each of those holes. I actually have eagled hole number 10 out there. So I had to kind of say goodbye to it this I don't know that I'll be out there playing golf. Not much used to have businesses out there, and so that was a reason to have played golf out at Sherwood. But a great course. But the cool thing about yesterday was the mere fact that Zach Johnson had a shot into 18 to easily win. All he had to do was get the ball on the green, and he dunked it in the water on his second shot, and then came back and chipped a shot in to make a par. That was pretty miraculous. And then, of course, he just simply went ahead and beat Tiger in the playoff hole back on hole number 18. Hole number 18, that is most of their balls. Tiger's balls, he hit two that kind of faded to the right. Zach's went to the right, and I can tell you most every second shot that I hit on that hole, it fades to the right. It must be the way the earth is tilted on number 18 at Sherwood Country Club out there, because when I saw those balls tilt to the right and go to the right, I was like, hey, that looks a lot like my shots on number 18. In any event, what are we going to be paying attention to today? Folks, the euro yen, that's giving you that's a screen that's on my chart out here. That's confirming it wants higher price. These markets, Santa arrived. Santa arrived on Friday, so the Santa Claus rally should be underway. Take us to higher prices. Have a great Tuesday, or a great Monday, folks, and have a great Tuesday too when it happens. But not until then. We'll see you tomorrow morning.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.